Hello everyone. We were discussing in the last class about the format of a cash flow statement. We have told that after discussing the cash flow statement format, we have told that we can solve a question in the coming class. That's what we are going to do now. We are going to solve a question related to cash flow statement. You can see here a company balance sheet is there. From the following balance sheet of X Limited as on 31st March 2019 and 2020, 31st March 2019 and 2020, prepare a cash flow statement. So all the details are there, equity and liabilities, all the liabilities are mentioned, capital and liabilities are mentioned. Then below that details of assets are there. Then you can see notes to account and additional information is there. These are the items given as the question for preparing cash flow statement. You also will get a question like this for preparing cash flow statement. Let us see how to prepare a cash flow statement based on this balance sheet. See, first of all, you know that we have to find out profit before interest and tax. Profit before interest and tax. So in order to prepare the profit before interest on tax, we have to see profit or loss. Here it is mentioned shareholders fund, reserves and surplus. So from reserves and surplus we will get profit and other details. Since here profit is directly given and there is no other items tax information is not given. See here in this balance sheet or outside anywhere tax is not given. Proposed dividend is not given. Transferred to general reserve is not given. So since those items are not given, we can see that this is directly we can take the difference of closing profit and opening profit, then we will get current year's profit, isn't it? That means last year 1,60,000 was the profit, this year it is 2 lakh. That means the profit of this year is 40,000. Okay, that 40,000 is the profit. So you need not calculate the profit again because directly it is given. So let us prepare the cash flow statement in the books of X Limited. Cash flow statement in indirect method for the year ended 31st March 2020 as per accounting standard 3 revised. Let us give the headings. First, you know that cash flow statement we will prepare in 3 different activities. Cash flow from operating activity, cash flow from investing activity, cash flow from financing activity. So we have to start with the cash flow from operating activities. Point A, cash flow from operating activities. In that we have to write the profit and profit before tax and extraordinary items. That in this question it need not be calculated, it is directly given. That's what we have told. So net profit before tax and extraordinary items, that is 2 lakh minus 1,60,000. How much? 40,000 is the amount that is written there. Now we have to add all non-cash non-operating expenses. Non-cash non-operating expenses. See, we can write that non-cash non-operating expenses. In non-cash non-operating expenses, we have to see, in the question you can see one thing. Here some adjustments are there. If any adjustment is there, it's related account we have to prepare as a working note. That will be good. If it is, suppose depreciation is there, if depreciation is given, this depreciation is related to which assets, its account is to be prepared. That will be better while calculating or while solving a cash flow statement. So that let it be there. Before that, any other item is there which are non-cash, non-operating in nature. See, cash share capital, we know it will come in financing activity. Long-term borrowings also will come in financing activity. Reserves and surplus we have already taken. Trade payables will come in either financing activity or working capital, changes in working capital. Then other current liability also, this directly given that outstanding expenses. This showing outstanding expenses. Outstanding expense comes in changes in current assets and current liability. That means working capital changes. So all those things will not come here. Then fixed assets, tangible. Tangible fixed assets, here it is a note. That means there may be more than one asset. So we have to prepare that. And intangible asset directly given goodwill. Goodwill, see, in the last year, the second amount column is belonging to last year, 2019. 2019 it is 20,000. It was 20,000. Now it became 10,000. So what happened? Goodwill written off. Goodwill reduced means goodwill written off. So that can be the first item writing here because that is non-operating expense. Goodwill written off. How much? 20,000 minus 10,000. So remaining 10,000 is written. Okay. Now current assets, inventory, trade receivables, these will come under where changes in working capital. Cash and cash equivalents, in that cash in hand is there, that we will take while preparing, while at the end while showing the cash position we will take that. And you can see notes to account. Here notes to account, long-term borrowings. We have given note number 1 here, there. Note number 1, long-term borrowings is there here. So that long-term borrowings includes 12% debentures and 12% public deposits. Okay. Then note number 2, it is trade payables. Trade payables in details given here. What it is? Creditors 20,000, 16,000 and bills payable 8,000 and 12,000. That means last year it was 12,000 and this year bills payable 8,000. And note number 3, fixed assets. Note number 3, and that note number 3 includes fixed assets of building and plant. And note number 4, trade receivables include debtors and bills receivable. Okay. Now in the adjustment it is given that depreciation. Depreciation we know that it is a non-operating expense. So we have to see that what is the depreciation charged to machine and building and plant. Here building last year 3 lakh, this year 4,40,000. Let us see, depreciation charged is 20,000. So last year 3 lakh was there. If depreciation of rupees 20,000 is charged, building should reduce from 3 lakh to 2,80,000. But you see it has increased to 4,40,000. That means some amount of building is purchased. Same thing is happened with the plant also. Last year 1,60,000 was there. 10,000 depreciation, so it has to reduce to 1,50,000, but here 50,000 increased. That means it became 2 lakh. That means plant also has purchased. So in such a case, we have to prepare the asset account. Let us prepare the building account first. So that is the working note. We have to write the heading working note 1, building account. Building account, particulars amount. Building account has opening balance. Opening balance should be shown on the debit side. To balance brought down 3 lakh. Then by balance brought down should be written. By balance carry down 4,40,000. Okay. Then the information given here is depreciation. You can see additional information, depreciation on building 20,000. So by depreciation, how much? 20,000. So these are the information given to us. So let us total that. 4,60,000 is the total. So credit side, since credit side is more, we are totaling credit side and writing that to the debit side and finding out the balance in the debit side. See how much we have got. 1,60,000. 1,60,000 balance we have got in the debit side. That means yes, it is purchase of building because building has increased. So what is the journal entry for purchase? Building account debtor to bank. In bracket we have written purchase and that is the balancing figure. So in order to understand that only we have written in bracket BF, shown balancing figure. Okay. So depreciation we have got, depreciation on building we have got, and asset purchased also is there. This asset purchase, you know, it is the money spent for buying an asset. That means money spent for investing in assets. So that bank will come in investment activity. Purchase of building will be taken in the investing activity. Depreciation will be taken in the this operating activity, cash flow from operation, and also in investing activity. You know that the thing which is given in the adjustment should be taken twice. So here it is already taken, depreciation is already taken here, then need not take in the investing activity. Now it can be shown in the depreciation can be shown in the operating activity. Okay, that's enough. Next, like that, let us prepare planned account also, working note 2, planned account. So in planned account, giving the heading, and let us write the opening balance. To balance brought down, it was 1,60,000, and balance carried down, by balance carried down, closing balance 2 lakh. Okay, depreciation is given here. Plant has depreciation of 10,000. By depreciation account 10,000. So here it is 2,10,000. We can balance that 2,10,000 taken to the debit side also, and the balance became 50,000. Same way, planned on the debit side increased, so it shows that purchase. If again it is a shortage and comes the balance on the credit side, it means that much asset is sold. So we will write there by bank. Here since it is debit side balance, it shows that purchase. So this also will be taken to the investment activity. Okay. So that's all. From here we can take 2 depreciations. That is the next item in the cash flow statement. Depreciation on building. Depreciation on building we have got 20,000, and depreciation on plant 10,000. Now let us see here long-term borrowings, note number 1 is there. Let us see long-term borrowings. Here 12% debentures are there, 12% public deposit is there. And here it is given that deposit of 80,000 were taken on 31st March. Okay, debentures of rupees 36,000 were issued on 1st October 2019. And here it says that 12% debentures and 12% public deposit. What that 12% of shows, that is the interest rate of debentures and public deposit. So let us calculate how much interest is to be taken. Interest is to be given, so that interest is to be shown in the operating activities. It has to be added to operating activity. So we can write the next working note 3, interest on debentures. Interest on debentures, see, debentures of rupees 36,000 were issued on 1st October 2019. 1st October means October to March. October to next March. That means 6 months are there. So opening balance 1,02,000. 1,02,000. Let us take that one first. 12% interest on 1,02,000 for 12 months. That was there full year, isn't it? So 1,02,000 into 12 divided by 100. 1,02,000 into 12%. So 12,240. And 36,000 is issued on 1st October. So for 36,000 we have to calculate next. 36,000 from 1st October to 31st March of 2020. That means 36,000 into 12% for 6 months, October to March. Okay, so total interest on debenture comes as 14,400. Now let us see. Deposit rupees 80,000 were taken on 31st March 2020. So since it is taken on last date of this current year, this 80,000 is not to be taken. We have to calculate interest for the opening balance only. So interest on public deposit, opening balance how much? Interest on public deposit, opening balance is 1,60,000. So 1,60,000 into 12% for full year. That means 1,60,000 into 12 by 100 for 12 months. That means full year 19,200. So that is regarding interest. So we can write that next. In the format you have seen interest, how much is there that we have to give. So then we have to write here depreciation on plant. Then you can see the format also, interest on debentures. Interest paid is there, that for that we are writing interest on debentures 14,400 and interest on public deposit 19,200. For one understanding purpose we are writing here working note number also in bracket. Okay, now operating profit we will get before working capital changes. All the items related to non-cash non-operating expenses are written. Non-cash non-operating incomes are not there here. Non-operating incomes are not there, so need not deduct anything. In this question non-operating incomes are not given. So directly we will get operating profit before working capital changes. we have to add all 1,13,600. Okay, then next, working capital changes. We have to mention the working capital changes. First we will add all decrease in current assets and increase in current liabilities. So decrease in current assets and increase in current liabilities we can mention. So in order to see the decrease and increase in current assets, we have to see the notes to a balance sheet. We can see first. See current assets here directly given 34,000 for inventory. Current year 34,000, previous year 40,000. That means inventory 40,000, from 40,000 it has decreased to 34,000. So the total amount of decrease is 6,000. So we can write that one first. Inventories 40,000 minus 34,000, that is 6,000. Then next, trade receivables is current asset. Let us see current trade receivables what happened. Note number 4. Debtors. Last year it was 1,20,000. Now it became 1,50,000. That means debtors increased. Bills receivable also increased from 16,000 to 18,000. So current asset decrease only we need to take now. So we are leaving that for the time being. Next afterwards we will see. Then we have to write here decrease in current asset and increase in current liability. So decrease in current asset is over. Now let us see current liability, anything is increasing. Current liabilities, we have two current liabilities here. Trade payables, note number 2, and other current liabilities. Let us see first the trade payables. Trade payables, we know that it includes bills payable and creditors. So creditors, whether any increase is there, that we have to see. Last year 16,000, current year 20,000. Creditors is increasing. Bills payable last year 12,000, this year 8,000. Bills payable is decreasing, that we cannot take here because here we have to take only increase. So creditors 4,000 increase, that only we can take here. Creditors 20,000 minus 16,000, that's 4,000 increased. Okay. Then we can add that here. We can add and write in the outer column. 1,13,600 plus 10,000. 1,23,600. Now let us show decrease in, that means increase in current assets and decrease in current liabilities will be deducted. Increase in current assets and decrease in current liabilities will be deducted. Okay. So increase in current assets. Current assets we have seen here. Yes. Debtors 1,20,000, that has increased to 1,50,000. So we can write debtors first. Debtors 30,000 is the increase. Next, like debtors, next item bills receivable also increases from 16,000 to 18,000. So let us write that also. $2,000 is the increase. Next, here decrease in current liabilities. So creditors already taken. Bills payable decrease from 12,000 to 8,000. 4,000 is the decrease. That should be shown here. So bills payable, its decrease is shown. Then we have in the question, see here, other current liabilities. Other current liabilities decreased from 6,000 to 2,000. That also we have to mention. Outstanding expenses, that is the other current liability here. So that is 6,000 minus 2,000, 4,000. So let us write the total in the outer column and can deduct from the above. Okay, so we will get here 83,600. What is that? That is cash flow from operating activities. See, listen here. Here there is no information regarding tax. So we need not deduct tax here because it is not given. If it was given here, we will write here cash flow before adjusting tax, or profit before tax we will use to write. Then after deducting the tax, we will write here cash flow from operating activities. Here directly we can write cash flow from operating activities. So first activity is over. Now let us see the second one, cash flow from investing activities. Cash flow from investing activities. Investing activity, you know, all the transaction related to the investment of assets. Investment of money into asset may be related to purchase of asset or sale of asset, interest received on investment, all such things. So let us see, we have prepared two asset accounts. So those things we have to see first. Building account, you know that here bank purchase is there, so that we can write, and after that we will be writing plant purchase 50,000. These two items we can write. Payment for the purchase of building 1,60,000. See, since this is an outflow, we will write that amount in bracket because these are the amount to be deducted. That means cash used in investing activity. We have used cash in investing activity for the purchase of building. That's what it shows. Then payment for the purchase of plant, that is 50,000. So see, since in this question there is no other flow of cash in investing activities, we can total that and write in the outer column. Here we can write in the outer column. Okay, 2,10,000. That is cash flow from cash used in investing activities. Cash used in investing activities. See the difference? Since it is minus this much cash we have spent more than our inflow. So that's what we have written, cash used in investing activities. Next we know cash flow from financing activities, that is the third heading. Now this activity includes all the transactions related to capital investment, that means financing of the business, means related to capital. So we have to see here shareholders fund onwards we have to see. So shareholders fund, you can see here capital. Last year it was 3 lakh, now it became 3,60,000. What it shows? 60,000 increase. How it increases? Yes, by issue of shares. So current year shares were issued and money received from the issue of shares. So we can write here proceeds from issue of equity shares 60,000. Then after that debentures, you can see long term borrowings, debentures. Last year 1,02,000 was there. This year 1,38,000 was there. So 1,30,000 8,000 and minus 1,02,000. So 36,000 is the increase. That means debentures also were issued. So proceeds from issue of debentures 36,000. Okay. Then public deposits. What happened to public deposits? 1,60,000 and 2,40,000. So we have got 80,000 more this year. That means public deposits issued 80,000. Okay. Now next item is interest. We have calculated interest. How much is interest for debenture and public deposit? Debenture we know that 14,400 and public deposit 19,200. These are the amount paid for interest this year. Interest payment is also financing activity. For the financing company, interest payment for financing company also financing activity only. Okay, interest received will be what operating activity for the financing companies. Okay, so these are the items in the financing activity column. So let us total financing activity also. Financing activity we will get here. Cash flow from financing activities. How much? 1,42,400. That means from all the amounts without brackets, the total of all those amounts, from that we have deducted the total of amount in the brackets. So 1,42,000 is the cash flow from financing activities. And next net increase or decrease in cash and cash equivalent. It is the total of all the activities. So that's what here we have written A, B, C. That means A for cash flow from operating activity, B for cash flow from investing activity, and C for cash flow from financing activity. The total of all the three. So you can see cash flow from operating activity is 83,600 and financing activity 1,42,400. So we have to add all the plus amount and can deduct the minus amount. Okay. So net increase or decrease in cash flows, we will get 16,000. Then along with this we have to add opening balance of cash and cash equivalent. Opening balance of cash and cash equivalent here we will get in the balance sheet. It is directly given. Cash in hand opening balance 1 lakh. That can be added. Cash and cash equivalent in the beginning of the year. Okay, add cash and cash equivalent in the beginning. How much? Here we can write in the outer column 1 lakh. So what we have to get next? Cash and cash equivalent at the end of the year. That amount which is given in the balance sheet should be equal to the total of D and D. Means net increase or decrease in cash and cash equivalent and cash and cash equivalent at the beginning of the year. If you total both the amount, we have to get cash and cash equivalent at the end of the year. Then the problem will be correct. Okay. So in the closing balance, we know that here it is given 1,16,000. That we have to write. If we get the total, that means from this 16,000 and 1 lakh, if you add, we will get 1,16,000. So like that, we have to get the total. While adding cash and, that means adding net increase or decrease in cash and cash equivalent with the cash and cash equivalent at the beginning of the year, if we get cash and cash equivalent at the end of the year, the problem is correct. Okay, that is the way to find out whether the problem is correct or not. So that is what about preparation of cash flow statement. We have prepared a cash flow statement now. So you can, after pausing the video, you can write down this question once again, and without seeing the solution you can try to solve the question, and after that you can match your answer with the answer given here. Then you will understand how to prepare that, and similar type of question also you can try to solve, because here you can expect a 6-mark question. Compulsory 6-mark question will be there for this examination, plus one question you have to prepare like this for project also. So it is a must, you can prepare this one, and similar type of question also you can see from your reference book and solve it. Okay, in the next class one more question we will be trying to solve. So I hope all of you understood this. Okay, once again you can go through the format. It is better to study the format very well, and you can practice it by writing 2-3 times, so that the format will not forget. If you don't know the format, it will be difficult for you to prepare cash flow statement. So in order to prepare the problem for cash flow statement, the best thing is that you practice the format first, and after that see the question and solve it. Then only it will be easy for you to solve. I hope all of you understood this. Okay, thank you very much.